Good morning, everybody. Welcome to the land of Option Pit. Welcome to the land of Option Pit, where we live, breathe, eat, and even dream about trading all day long and all night long. And that is an exciting thing because we have got some special market these days. We're starting to get that nice volatility that represents opportunity. Let me just do a little share. I'd like to share with you my screen. How's everybody doing? We got a little softness today, just a little bit, right? We've been dumping a few things. We've been dumping a few things in the portfolios, doing a little bit of income trading on top of some layers of some other kinds of positions. So income, upside, doing all that fun stuff. Let's see. Have you guys got my screen here? Nope, wrong one. Let's go to stop sharing. Let's go over here. Nope. Stop screen, and then let's try another one. Let's try one more. Oh, the irony of me being a tech guy, an AI guy, and always struggling with this stuff. All right, let's add that to the stage. Okay, beautiful. Okay, everybody, so I'm going to make this a little bit bigger here. And so we can, how do you even do this? I don't even know how to use the these Google Slides. Slideshow, there we go. There we go, slideshow. So, okay, first of all, again, welcome everybody. I'm Hans Albrecht, 30 years in this game, in the trenches, as a pro options market maker for 15 years, options arbitrage, volatility arbitrage, running a whole bunch of cover call and income type funds, as well as downside black swan funds that really kick it up a notch when markets get jiggy to the downside. So an unbelievable amount of experience. Kind of scares me to think about it all these years. But really, from income to leverage and everything in between. And, that's what you want to learn. You want to be a well-rounded options trader, and that will inform your investing as well. I teach people about options. I say, you know what, you might not even ever trade an option, but you want to understand volatility and all those things that nobody else is really talking about. Everything else is cursory kind of stuff. When you're at Option Pit, you get the good stuff. So Head of income trading and head of turbo income trading as well, where we've been doing fantastically well. So now here's the deal. I want to launch right into it here. We've got some markets. We're not going to waste our time talking about markets, but everyone has been glued to the mega caps. And I've been sort of peeling off a lot of these positions lately because it's all been about, parabolas. We see some stocks, Oklo, things like this that have doubled in a short time in the power generation space. I love AI, as everybody knows, I love AI, but manias go through ebbs and flows, and we're going to just look for those waves and ride them. And sometimes we got to come in from the waves, have a beer, maybe have a little snack, and wait for things to settle, and then we're going to ride the next wave again. And sometimes we're going to ride the wave. We can ride some of those stock waves down as well, which is always fun. You want to be like a bit of a two-way trade, which we have services that do all this stuff. So, but first of all, the ripple effect from AI, of course, is going to be very, very big. And it's in my view, it's early innings, but stocks don't equal reality always, and stocks can get a little bit exuberant. And so we're starting to see what I call a little bit more benefits to the other 490. So if you back out some of the mag, which I don't think are particularly expensive in most cases, and you're starting to see some of the benefits, and we're going to talk about those today, a very, very big theme. And this is going to lead to something very important that Mark is going to be talking about later on today. And you don't want to miss this, because a lot of the time being a good trader is really recognizing slight shifts in the narrative. Everyone can kind of get stuck in the trees and not zoom out and kind of see the proverbial forest for the trees. So we're starting to see a little bit of breadth. Equal weight S&P small cap indices starting to perk up a little bit. We saw the IWM, which Mark's been talking about, kind of push up. That's good news. And I think it's a very valid backdrop for a strength in IWM, because the leadership is going to spread, right? We've got lower rates that are here finally after all this time. We've got a big swath of balance sheet challenged companies that need lower rates. They need lower rates, right? Microsoft, Apple, do they need lower rates? No, they're sitting on $100 billion in cash plus. They don't care about lower rates. In fact, they don't mind rates being up. They get to make money on their cash, because all Apple can do is really buy stock and sit on a bunch of cash. Although I do love the name. I've loved it for about $50 now, if you guys have been paying attention. It's a great AI in your pocket name. But we are talking about a special moment. There's an old saying, when you get to a fork in the road, take it. And it doesn't give you any insight at all, because it's just a joke. But it's kind of funny, because I think we're at that fork in the road, and we do have to take it, but we have to figure out which part of the fork to take. And there are going to be subtle shifts over time. And this could be one of them, where we're going to see this broadening out. We're going to talk about why that is happening. We've talked about the housing flywheel before. These mortgage applications, you're already seeing them tick higher as rates come down. People are going to be moving literally. We're going to see some activity in real estate. That's going to unlock a lot of equity, a lot of spending, potentially a big plus for a part of the economy that does rely on everything surrounding housing, from commissions to closing fees and assessments and inspections, and then Home Depots and Ronas and you name it. People are going to be spending money left, right, and center. And a lot of people own homes. Not everybody owns very much stock, right? It's kind of you're lucky if you have a lot of equity assets. So small caps are going to be very, very interesting for this reason, because I want you to think about something here. These are the kinds of businesses that have not done necessarily as well, and they have lived in the shadow of the large cap company that has done very well. The earnings are there, right? You can complain about concentration in equities all you want. That's where these companies are making money, the top names. There's nothing wrong with that, in my opinion. They are moving the needle. But guess what happens when things start to broaden out, because of a number of important things that I'm going to talk about. Now, First of all, I'm going to tease you a little bit. Take a look at market manias, right? So back in the dot-com boom of the late 90s, I was there. And it was a fantastically fun time for traders. But the NASDAQ just kind of went ballistic, and stock markets went ballistic in general, to the point where Cisco is trading at 100 times earnings. That's not happening right now, but we're starting to see evidence of this spreading into the broader economy, that there's going to be this level of excitement. And back then it was kind of like, pets.com, you added .com to your name and then your stock doubled or tripled. And it was really a whole bunch of fluff and not a lot of substance. The substance came out of that. Over the next 10 years, we saw the behemoths that we know, the hyperscalers like the Amazons and the Googles, et cetera, that now are benefiting from the fruits of all of the labors of what they created in the 90s. And hold on to that thought, the benefits of the fruits of the labor spreading ultimately into benefits for some companies, many companies, and benefits to the economy, to the consumer. Think about it. I mean, everything from the internet. Your trades are now free or $4.99. You can go online and find the cheapest deal in like 3 seconds on something, so you don't have to overpay for anything. Think of the benefits that have come from the internet, productivity, efficiency, and all those kinds of things. Then 2021, another mania, when COVID came and it was all about Zoom and working from home and all this stuff, stuffing your pantries with stuff. Well, you can't pay too much for Amazon and DoorDash and all these things because, well, they're helping us survive, right? So something's traded up to, 400 or 500 times price earnings multiples. And that made sense at the time. But, in hindsight, that's a mania. And I think we could be on the verge of more mania right now. And I've been talking about this for months. This shouldn't be new to anybody who's following me. But we are now in a different world because AI inference is very, very different. AI inference isn't .com. It's not getting people online. That's it. You've succeeded. You put somebody online, you get them AOL, and you get them an internet connection, and you've succeeded. And then slowly some of the benefits kind of accrue to that. But AI inference is something that's going to play out throughout the economy, left, right, and center, everywhere you look. It's everywhere. And the Oracle news the other day was massive, and we've had a couple of little bits of news like that have identified that this isn't going anywhere. It doesn't mean Oracle is going to double again overnight, but it means that the theme is still very, very strong. They're still building this out throughout the world, and the demand is insatiable, is what those Oracle numbers showed. Now, I don't know if Oracle can handle it. They're not there. They don't have the balance sheet to handle all this forward, sort of growth and demand. Probably it's going to be tough, but it is showing you that for every headline you see about AI being some sort of bubble, you get real world evidence. That's what a lot of people are getting wrong. You get real world evidence that this is nowhere near a bubble. And in fact, it's accelerating. This isn't not a bubble. It is actually accelerating as they build data centers, as they continue to build everything out, and then inference starts to play out. And so this is something that we've been playing on. We've nailed so many moves. Here's Nebius, right? I picked this. I don't know if we have where I told you to buy right here. And here we are. This is the build out that we are talking about. Insatiable demand. Microsoft invested $20 billion in this company. That's like off the charts massive for where this company has come from over the last year. And it says, this is non-negotiable. We need to be involved and we need to position. That's Microsoft. And you can see them doing deals with nuclear, doing deals all over the place, saying this is non-negotiable. If we do not set ourselves up for this future, if I don't do, this is a kind of smart data center play in Europe that is going to be, it's not like the Equinixes, it's in the basic Amazon layer of cloud. This is smart stuff, right? They fill these things with GPUs. This is going to be inference on demand, inference for rent. This is going to be what people want now. The training phase is over. You can stuff your Amazon photos in a file in your Amazon photos. That's going to sit there, and that's going to be important too, which is why I mentioned WDC a few weeks ago, and it's up 50% since then on Ticker Highlight Show, right? So there are going to be strong themes in the memory space, in the storage space, in the companies that really kind of crunch numbers and make sense of it. And this is one of them, right? This is one of those names that's going to probably continue. I mean, the story's strong, and we're playing it in Turbo Income. I think we're up 150% on those, and we're doing a bunch of income trades. So you have to understand that there's always going to be story, and there's going to be the market part of it. The story isn't really going anywhere. The market part of it is going to do what markets do because they're open every day. And so we are going to continue to take advantage of this. Let me see if I can get this slide to go next. Oh, there's no next slide on here. Oh, that's kind of weird. Wow, that's really weird. So did any of you grab Nebius? Did you? And by the way, I mentioned Nebius, and I said this is a way cheaper choice over CoreWeave, which is the other really, really popular one. Nobody really knew about Nebius at the time, which is really popular. I said this is way cheaper and my preferred trade. It's now tripled, and CoreWeave, I think, is down a little or barely up, right? So you're not always going to win. You got to know what to do. It's not the tide is going to lift a lot of boats, but you got to know there are going to be some potholes in there as well. So I think this is where we have to start paying attention. I can't get this to work. Christian, let me see if I can. There we go. Oh, we don't even have another one. Okay, that's why it's ended. So the real opportunity, and this is what I think Christian's going to put some information in here. The real opportunity is going to be in this world that is now going to benefit from many of these things. Remember when I mentioned the fruits of the labors? The fruits of the labors of the build out of the internet played out over the next 20 years. The fruits of the labors of creating the inference phase, which is the training part, and then now early innings deploying that ability to create untold insight into everything that we do for companies, for individuals, for you and I. That is this particular phase. Now, imagine that you are a small cap company. I'm going to show you. We're going to show you some really, really cool stuff actually tonight at I think it's at 4:30, right, Christian? 4:30, 4:45 Eastern. We're going to show you some really, really compelling charts where you're going to go, OMG, Hans is right and Mark is right. This is getting going. Do you want to get involved 6 months from now when it's nothing but headlines? It's the main headline on CNBC. Or do you want to get on when things are starting to get going? And Mark is going to show you a way to get on in a very, very big way. And we're going to show you how profit margins are starting to reflect. Imagine you're a small cap company and you now have the ability to do with your double what you to do with 20 people what you used to do with 40 people. Or you can do much more with 20 people than you used to be able to do. I know people, they're like, I get a week's worth of work done now by Tuesday. How do you think that plays out as rates come down, already a boost for small cap and medium cap, as productivity gains and benefits start to make their way through the part of the economy, the 70% employment part of the economy? That is going to make a very, very big difference in terms of innovation, what companies can create. Now, I know some people are negative on the jobs aspect of it. I think it is more a collaborative thing right now. It is a collaborative thing. AI is not the easy button that people think it is yet. It may be in a couple of years. But for now, it's going to be a collaborative thing that has the potential to juice the economy and juice the stock market. And my friends, that is what is going to lead us to a mania that can be capitalized on if you are in the right place at the right time. And a lot of that is confidence. I was talking about that the other day. I said, a lot of it is having community, right? You might feel like for example, the market just ran up 1,000 points in the S&P. Then in Turbo Income, we made 80, 100%, 120% on positions. What's a hard thing to do? Market runs up, everyone's going, everyone is going, the market's gone too far. So they're sitting around and they're missing opportunity. Do you want to miss opportunity in what is, in my view, probably one of the biggest revolutionary regime change kind of environments that I have seen in my lifetime, and probably that we've seen in hundreds of years? This is bigger than the internet. The internet set the table for it. If I didn't have the internet, I couldn't take advantage of the internet. I had to figure it out. I had to go get it. Not that that's super complicated, but now everyone has the ability for AI inference. It's in their pocket. It's going to be literally in everything they look at. It's going to be in healthcare. It's going to be in military. It's going to be quite literally everywhere. And there are going to be small cap companies that Mark has picked. There are going to be small cap companies that are going to be completely under the radar, that one day somebody goes, oh, wait a minute, I didn't think of that. I think there's going to be a real big, I didn't think of that kind of market. I didn't think these guys could do well because of what's happening in AI, because of what's happening as benefits spread to the broader economy. So what I've been doing in some of my portfolios is moving into a little bit more broad. And I'm going to show you some really, really cool charts tonight that show you why there's actually evidence that this is a good move to make, because it's a little bit different than the 90s. Ninja Explanation says, can you just tell us what stocks to buy? Absolutely. Later. Absolutely, my friend. We will tell you, and we will give you wonderful ways to have exposure to exactly what you're asking for, because this is going to be a gangbusters kind of economy. And I think that is going to translate into a gangbusters environment for us as traders. So that's it, guys. I got to run. I got a class. I hope you guys are excited. I think it says join Mark and Hans today at 4:30 Eastern. If you miss it, man, you miss it. This is not going to be about buy NVIDIA. Why don't you pick up some Amazon? Boy, they've figured out AI. No, this is going to be about something that nobody is talking about. And you're going to hear about it here. And it's going to be really, really exciting. And I actually can't wait to see some of these. I've gone through the list. It's really, really cool. And I want to look a little bit deeper myself, but I'm really excited about it. Okay, folks, have a great morning, and I will see you at 4:30. Put it in your calendar. Create one of those little alarms. I have like 17 alarms go off every day. There we go. Ha! I totally didn't set that up. I got the alarm. Set up one of those alarms right now for 4:30 so you don't miss it, and we will see you guys there. Take care.